I want to talk to you about something that I'm incredibly passionate about: finance. Now, you might not share that passion, but I hope that by the end of these 12 minutes that you will share that passion and you will understand how that together we can harness the roughly $300 trillion that flows through the global capital markets to finance a future that we all want to retire into. Not just a future where we've got the money for our pension, but actually that we've shaped that future, the future that we want to bequeath to our children. So I want to talk to you today a bit about how companies relate to your world, how you relate to their world, and I want to talk to you about how the markets, I think, are failing. Now, that might be an unusual thing for somebody in the position that I'm in to talk about. I work for a financial services firm, but the markets are failing. They're failing in three ways. They're failing to deal with our personal ethics. I'll talk a bit about that. They're failing to promote long-term investment by the very companies that they're investing in. And they're also failing to recognize that we have a one-planet boundary condition around which our financial services system and our economy has to operate within. So, and the crucial thing, I don't want to just depress you, I want to leave you with how we change this system. How do we collectively make sure that we have a future that we want to retire into using this money, using our own personal savings, pensions, and investment? So, many of the companies on this slide will be familiar to you. Many of them will be the kinds of company that you relate to every day. Few of us really stop and consider just how much companies shape our world. Yet, these companies and others put the food on your table. They provide the furniture in your house. They will build your home. They might build the car outside your house. They'll provide the entertainment. They might take you on holiday. Every part of your world is shaped by these companies. But you also can shape them too. If you don't invest today, then you may in due course. But for those of you that do have pension savings and investments, these are all companies that have come to your fund managers and asked those managers for your money so that they can grow. Where your fund manager has bought them, where they've invested in an equity, you have an opportunity to influence them. At the AGM, your fund managers will be voting. They might vote on the re-election of the directors, on the director's pay, on the audit statement, on how well those firms are run. And they're doing that on your behalf. Now, my team votes on over 4,000 company meetings every year. We vote on over 44,000 company resolutions on over 300 billion. Now, you would think that because we run money for tens of millions of people, that we had a cacophony of demand from our clients saying, how are you using our money? How are you voting at these AGMs on our behalf? How are you promoting responsible business practice? But it doesn't happen. Even though we've tens of millions of clients, only a few hundred of them ask us every year, how are we voting? And I think we need to change that. We need to recognize that we shape companies just as much as they shape our life. We can use that vote. And if you do one thing differently from today, please ask those fund managers who run your money to tell you how they vote on your behalf. I said, though, that finance was failing. I would be surprised if any of you in this room would want to benefit financially from your friends and family killing themselves from smoking. Now, if you've bought an index tracker, or if you've used a conventional benchmark like the FTSE All-Share or the S&P 500 without realizing it, stop and think about the fact that tobacco companies are actually part of that benchmark. And if you don't know where your money is invested, the chances are that at some point it will be invested in tobacco companies. In addition, many of you, I'm sure, recognize that we need to actually arm ourselves, unfortunately, in today's day and age. But how many of you are comfortable with the thought that your money might be invested in companies producing landmines and cluster munitions? Yet there are a few dozen companies around the world that are listed that do just that. Is that something you're comfortable about? If you have ethics that you want to see expressed in your finances, you need to express that fact. You need to demand a fund that might be ethical. You need to make sure that your benchmark doesn't include these things, and you can ask for example, FTSE for Good. So there's ways in which you can engage with the systems to make sure that your ownership is used positively, and that in other words, through your vote, and that your money is invested in the kinds of things that you agree with. So that was the ethical failure and how you might deal with it, and that was the ownership failure and how you might deal with that. Now, this schematic represents how money is invested from you as individuals, from all of us, how it gets into this system, how it's then put to work by companies that produce these goods and services, make a profit, and then that profit flows back to you in the form of a better pension, better investments, better savings. Now, no one designed this system. It's evolved. This system is putting short-term pressure on companies. That's not a controversial fact. Most chief executives of listed companies today would say that even if something, let's say they're investing in the training of their workforce or in research and development, if that's not going to pay back for a few years, even next year, if the costs are going to harm next quarter's earnings, then they won't do it. Now, this short-termism means that the companies that should be financing our future, that should be creating the world in which we want to retire, are focused by their owners on next quarter. So what's going on? Let's take you on a little journey. Let's imagine you're 25 and you're putting your first £100 into your pension, which is a very clever thing to do as a 25-year-old, and certainly I wish I'd done that. Now, your money, in this diagram, the asset owners, you as individuals, put your money into a pension scheme. That pension has trustees, well-meaning people, but often not expert investors. So they will use an investment consultant. That investment consultant will advise the trustees which fund manager to choose. I work for a fund manager. Now, those investment consultants, though, they get paid more money every time they look for a new fund manager. So whilst as a 25-year-old, you might have had a 40-year view on your money and when you want it back, that 40-year view gets collapsed by the investment consultants already to about 3 years. They then check the performance of fund managers every quarter, and if you're a fund manager, you can touch a button and see how you're performing every second of every minute of every day. Imagine being able to do that in your jobs. What kind of behaviors do you think that motivates? It takes a very courageous fund manager who has the courage of their convictions to invest for the long term while the market is going against them. And often your money will be invested by computers, index trackers or algorithms, not even really individuals. So there's a really big problem of short-termism. 40 years ago, average holding periods used to be about 8 years. That's collapsed over the last 40 years to about 8 months. Now, that's not ownership. That's a lease. So if we're going to promote long-termism within the businesses, we need to make sure it's being done on our behalf. So that was the problem of short-termism. I also said there was a problem of the one planet boundary condition. As a fund manager, when you are looking at companies, you look at the cash flows of that company. You look at its profits, you look at its losses, you look out to the future, you try and work out what that company is worth today. You focus on its cash flows. Now, the reality is, if a company pollutes or it extracts raw materials at a rate that's greater than the planet can provide them, those are external costs. They're externalities in the jargon. They're external costs on society, on the environment, and future generations. But because they're external, your fund managers don't look at them. They shouldn't. It's not relevant to the valuation. Now, that might be okay for that one individual company, but when you've millions of investors making billions of investment decisions on trillions of assets under management every year, we're actually financing a future that ignores that planet. If we all lived, if all the 7 billion people on this planet lived in the way that we do here or in the way that they do in the US, we'd need 5 planets worth of resources. We clearly don't have that. We have an issue. So, what are we going to do about that? Now, I'm proud to work for an insurance company that's been around for over 300 years. Our chief executive, Mark Wilson, almost exactly a year ago launched a roadmap for sustainable capital markets. Some of them are here for you if you wish to take them. Now, that roadmap was launched at a UN event. It contains dozens of ideas for how we could restructure finance so that it genuinely financed that future that we wanted to retire into. I would ask you to read it, but I'm going to focus on 3 ideas here today. Firstly, I've taken this roadmap to the 3-party conferences in the UK, to Paris at the OECD. I've taken it to Brussels to talk to policymakers there. I've taken it to the UN in Geneva, and I've spoken at the General Assembly in New York, which was an incredible experience. But my experience has been that very few of our policymakers and politicians actually understand finance, let alone us. We should be furious. Why isn't finance, what I've just taken you through, isn't that complicated? Why isn't it part of our national curriculum so that we can all properly understand it and ideally trust it and certainly know what's done in our name on our behalf? It needs to be part of the national curriculum. Even if you've done an economics degree or a finance degree or an MBA or a politics degree, you aren't taught how finance works. How can we expect it to work on our behalf? Is it any surprise that we've had a financial crisis and the consequences of that? We need to change the curriculum. That's the first thing we need to do. Second, I talked you through that chain of supply of capital to companies. The fund manager, the broker, the investment consultant, the stock exchange. Now, we need to have a chain of transparency and accountability connecting us as individuals to the companies. We need to know where our money is and where it's invested and how that influence was used. And I'd be surprised if any of you actually knew where your pension was invested and how your votes were voted at the last AGM. Because you often find it very hard to find. Your fund manager is under no requirement to publish it. Why is that? We need that chain of transparency. That's the role of government, that's the role of us to demand that. Third, we need to get the prices right. These external costs outside of the blinkers of fund managers, we need to widen those blinkers so that the costs on the planet, on future generations, are actually in the cash flows of companies. And again, that's the role of government to do that. They need to make sure that the business environment is fair and balanced and sustainable and for the long term, for all of our futures. Now, we need to make sure that our short-term politicians realize that we are concerned about the future. My company, as I say, has been around for over 300 years. We'd certainly like to be around for another 300. But the only way that's going to happen is if we start collectively dealing with these problems of climate change, ocean acidification, over-extraction of natural resources, and make sure that our economy and our financial services system is put onto a more sustainable basis. And it is our collective job to make sure that happens. Thank you for listening. Thank you.